So year to date through the end of the third quarter, the S&P 500 was down about 24%. And the more growth-oriented NASDAQ index was down a little bit over 30%. So we've obviously seen quite a reversal in direction over what we experienced in the immediate wake of the pandemic. One of the things that you can draw some comfort from, especially with regard to the Amana funds, is the fact that we have a very risk-averse approach. All of our companies have very strong balance sheets. Rising interest rates don't necessarily affect their margins because they don't have much debt to begin with. They're strong cash flow generating companies, companies generally at attractive valuations, and companies that have a history of management integrity and management competence in running their businesses over a long period of time.
We still have a very keen eye on the investment climate. We are attentive, more importantly, flexible, but also being highly committed to our role as being stewards in your long-term investment objectives. With that being said, the third quarter ended on a little bit of a bumpy note. Inflation, indebtedness, pervasive energy prices, and more importantly, tightening of financial conditions, all with a bit of a gloomy outlook that growth is going to continue to wane. It does not mean this is everywhere in every part of the planet. The Middle East is anticipated, particularly noted by the GCC region, known for the Gulf Cooperative Council. Inflation expectations for 2022 is about 3.1%, while the Middle East is expected to experience 5.9% GDP growth. The IMF's view on the world economic growth is about 3.2%, a vast difference. Investors still can be rest assured the issuers in that region are extremely stable, there's ample liquidity, and our attentive focus on owning issuers led by strong management teams focusing on profitability and maintaining strong stewardship are going to serve us and our clients through these kind of storms.
So we've had a lot going on in the markets this year, whether it be the oil prices, whether it be the war in Ukraine, interest rates rising, all of these things. And in the long term, all of these things from the market's perspective are all noise. With every pain, there's also opportunity. And so one of the opportunities you see is the valuations are coming down. Some of the ridiculous valuations you were seeing in the technology area or in cryptocurrency and those type of things, some of them, those companies have gone away, others have become cheap enough that they become more of a value play. Now, one of the things that happens in this environment of higher interest rates is that value tends to trump growth. And so looking at companies that pay good dividends, have a history of increasing on a yearly basis dividends, it is where the opportunity lies.
Performance data quoted herein represents past performance and is no guarantee of future results. Investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be significantly higher or lower than data quoted herein. Performance current to the most recent month end can be obtained by visiting amanafunds.com or by calling toll-free 1-800-728-8762. Please consider an investment's objectives, risks, charges, and expenses carefully before investing. To obtain this and other important information, which you should carefully consider before investing, about the Amana funds in a free prospectus or summary prospectus, please visit amanafunds.com or call 1-800-728-8762.